Okay, let's dive right in. If you've been watching the markets this week, you've probably got whiplash. I mean, on the surface, nothing seems to make any sense. The news is all over the place, it's contradictory, and every headline seems to be pulling in a totally different direction. But what if I told you there's actually one single, powerful story connecting all of it? A story that explains every weird market move and reveals one of the biggest economic shifts happening in our lifetime. Okay, so first up, the Fed. They cut interest rates, which, is usually the market's green light. Lower rates, cheaper money, investors love it. But then Fed Chair Powell gets up there and delivers this surprisingly hawkish message. Basically, he's worried about inflation, and he's not promising more cuts. He even said another one in December is, and I'm quoting here, far from a foregone conclusion. So they give with one hand and then hint they're going to take it away with the other. Total confusion, right? And then you look over at big tech, and things get even weirder. So both Google and Meta reported they were spending absolutely insane amounts of money, but the market's reaction? Completely opposite. Google's stock jumps up over 7%. Meta, it gets hammered, dropping 8%. So same story, huge spending, but a totally different reaction from Wall Street. Clearly, the market cares a lot about what they're spending all that cash on. So what's the deal? So what's the one hidden force tying all this together? What connects the Fed's mixed messages, the wild swings in tech stocks, and this growing divide we're seeing across the whole economy? Well, here it is. We are watching, in real time, the largest coordinated private infrastructure investment in modern history. And this isn't just about software or lines of code. We're talking about a new industrial revolution, but for artificial intelligence. And it's being built with concrete, steel, and fiber optics, right now, here in the physical world. To really get this, we gotta talk about one key term, capital expenditure, or just CapEx. Put simply, it's the money companies spend on stuff, physical things. Buildings, massive servers, high-tech equipment, all the heavy-duty gear they need to grow. It's the budget for building the future, and right now, that budget is just exploding. So how big are we talking? Well, get this. Just 3 companies, Google, Microsoft, and Meta, in a single quarter spent a combined $78 billion on CapEx. And let's be clear, that's not their revenue, it's not their profit, that's just what they spent on building more stuff. And it's not just the amount, it's the sheer speed of it. That $78 billion figure, that's an 89% jump from what those same companies spent just 1 year ago. Think about that. The pace is nearly doubling year over year. That's a mind-blowing acceleration. And hey, don't just take my word for it. This caught everyone, even the pros on Wall Street, completely by surprise. A recent Goldman Sachs report put it pretty bluntly. Capex, again, surprised to the upside. And that word, again, that's the real kicker. It means that even the experts, whose entire job is to predict these huge numbers, keep underestimating the massive scale of this AI industrial revolution. Okay, so here's where it all connects. Building this gigantic digital brain for the planet has a very real, very physical side effect. It takes a mind-boggling amount of electricity. This incredible digital revolution has a very real and very, very thirsty physical need for power. Now, this is where things get really fascinating. This chart right here shows something that has not happened in nearly 20 years. For decades, as you can see, total U.S. energy consumption was basically flat, or even going down a bit, thanks to all sorts of efficiency gains. Well, that trend is officially over. Just look at that projection. We're about to shoot right past our old peak from way back in 2007. A trend that held for decades has completely flipped on its head. So what's driving this insane surge? Well, according to analysis from Morgan Stanley, it's basically a perfect storm of 2 huge forces hitting all at the same time. First, you've got the incredibly power-hungry AI data centers that we've been talking about. And second, you have this major trend of reshoring, bringing big industrial manufacturing and all its energy needs back home to the U.S. Let's put some numbers to this. U.S. electricity use is now projected to grow at about 2.6% per year. Now, that might not sound like a huge number, but trust me, for something as massive and as mature as a national power grid, that is a seismic shift. In fact, it's the fastest growth we've seen in this country since before the year 2000. And you've got to understand, this crazy new demand for power isn't just a headache for engineers. It's completely redrawing the economic map. It's creating this huge divide with a brand new set of winners and losers starting to emerge from this energy scramble. This table here breaks it down perfectly. On one side, you have what's being called the tepid transition. Basically, the old school energy giants, oil and gas, are winning because the demand for reliable 24/7 power is surging. But on the other side, you have the growth enablers, renewables, natural gas turbines, and they're also winning because they're the ones plugging directly into these new AI data centers. It's wild, right? Both old and new energy are winning, but for completely different reasons. And this gets us right back to why the broader market feels so confusing. This massive AI investment isn't benefiting everybody equally. It's like Goldman Sachs put it, we are just not in a rising tide lifts all boats. Dispersion is wide as ever. All this money is getting funneled into very specific places. The companies building the AI and the companies powering it, while a lot of other parts of the economy are feeling the strain. Okay, but there is one last piece to this puzzle, and frankly, it's the biggest one. This whole AI-driven energy boom, this new industrial revolution, it's heading for a direct collision course with our global climate goals. Our technological ambition is creating a really profound environmental challenge. I mean, this chart just lays it all out, plain as day. That bar on the left, that's where our greenhouse gas emissions are headed, and you better believe AI's energy demand is hitting the gas pedal. The much smaller bar on the right, that's the target the US promised to hit under the Paris Agreement. The gap between where we're going and where we said we'd go isn't just big, it's getting bigger. And if you want to put a number on that gap, by 2035, the shortfall is projected to be 2.4 gigatons. That is a massive number. And it really captures the central tension of our time, doesn't it? The race for technological supremacy versus the race to save the planet. So it all comes down to this one question. We are in the middle of building an incredible revolution that demands more power than our grid, our economy, and maybe even our planet was ever designed to handle. We know the potential rewards of AI are immense, but the real question is, are we ready to pay the price?